Hello, Andy Tanner here. Welcome to the Cash Flow Academy podcast, where we make investing fun, simple, and real. And we've got all three of those bases covered today. We have Ethan Everett, and it's going to be, he wrote a great book on investment philosophy. We're going to learn from some of the great thinkers. Make sure you like, subscribe, notification bell, and always remember cashflowbonus.com for free education. Get yourself started. Pick up your free materials at cashflowbonus.com. With that, let's get started. Ethan Everett, thank you for coming to the program. Excited to have this conversation.
Yeah, very excited to be here. I think, for me, this book was really a passion project. And I'm excited now that I've finished this project about bringing it to other people, because I think not only is it fun to learn about these thinkers, but I think it's even more fun to take what they said, distill it, and apply it to the chess game that is investing. So yeah, I'm very excited to be on the podcast and looking forward to some really interesting discussion.
Great. First, let's start off with your background. Tell us just a bit about yourself, where you came from, how you got here, and bring us up to speed.
Yeah, absolutely. So I'm a New Yorker, born and raised. I grew up in Larchmont, New York, about 30 minutes outside the city. I've always had interest in things of strategic nature, whether it was sports or chess for that matter. I was a big chess player growing up. And then I discovered the stock market. I must have been 12 or 13 years old in my middle school math class. We had a teacher that introduced us to this fantasy stock exchange game, and I was hooked. It felt like 3D chess on steroids. The rules weren't explicit. There was just so much going on, and everything was constantly moving. So I decided actually that I wanted to do a business finance major in college when I went to Bucknell University, but I also wanted to have kind of that liberal arts background, because I always felt I had always had an interest in other kind of fields. I remember asking my father when I was actually, I think, again, a teenager, I said, can I get a law degree and an MBA? And he said, yeah, well, his friend did that. There's something called a JD MBA. And anyway, after minoring in philosophy at Bucknell, I worked in investment management on the bond side for a couple of years. Eventually went to pursue my JD MBA at Cornell Law School and Cornell Business School, and then came out from that, worked at some funds, and now I am working doing equity research on the buy side for a firm called Galvin, Gaustad and Stein out here in Scottsdale, where I really get to do what I love and basically research good investments all day and then recommend them to our clients. In all of that, somehow over this, I guess 5-year period, I managed to put together this book, and at sometimes it was more active than others, but I finished it and it's ready to go, and I'm really excited about it. I think that aspects of it have definitely shaped who I am as an investor, and I think that my idea with this book is not to be prescriptive insofar as saying, oh, this philosopher says to do this, you should do that. It's really more of, this is how I read philosophers and was inspired to kind of up my investing game. How can you also potentially look at thinkers, whether it be these thinkers or other thinkers that are somewhere in your life, and kind of apply those lessons in your investing to make you a better investor? I want people to make their own connections. Some of these discussions are great because people will make a connection with a thinker. I'll say, wait, why didn't I think of that? It's really, for me, it's just a starting point for everyone else. And, again, that's why I'm excited to discuss it. There's 13 thinkers featured in the book. I'm happy to talk about any single one of them, but I'm absolutely happy to go outside of that. So there's a lot more than 13 thinkers. I had to whittle it down to those 13. I probably went through, dozens and dozens and dozens that didn't make the cut, but still had interesting stuff to say. So,
well, they say birds of a feather flock together, and the older I've gotten, the more I've sought out learning about things like philosophy, because there are certain things that are what we used to call generalized principles that can apply to a chess game, or to an athletic contest, or to investing. And if you can find what those generalized principles are, I think the reason a book on investing philosophy is very timely right now. And perhaps Jeff Bezos, I found myself quoting him a lot recently, as he says, look, you can try to figure out what's going to happen with all this change, AI taking over the world and all these things. But if you can locate things that are going to stay the same, gravity is not going to change with AI, right? We're going to have summer, winter, fall, and spring with AI. Some things, the way we go about the world, there's just some things that won't change. And if you can build your foundation on the things that don't change and have a good, solid philosophy, that's a big deal. You also, I also listened to you when you said we're going to look at all these philosophers and thinkers, both, and you're going to decide where you land. I think that's great. We might start with one of my favorites is Thales of Miletus, who was one of the first of the great Greek sages, and he said he did two things that made me stumble onto him. First of all, I was studying options, and it's widely agreed he was the first guy that created intrinsic value in a contract and sold them, where he cornered the olive press market.
Yes.
But also he said, know thyself. And so as you get to know yourself and who you are, you'll find your philosophy that works for you. So let's talk a little bit about this. You began studying philosophy before law and before finance and before investing. Tell us a little bit about why a person would want to study philosophy and how that might help.
So I think that it's interesting. For me, I didn't go in thinking, I'm going to study philosophy because it's going to make me better at investing. It had to be something I was already interested in to begin with. And the same thing actually with law. But why philosophy? I think philosophy is so important is because it creates a habit of how you think and how you approach things. And like you said, when you're looking for things that stay the same, philosophy is something that kind of grounds you. It's kind of, in the way I see it, it's almost like an ante to the game of all these different types of intellectual disciplines. You need to have some sort of grounding, and that is what philosophy gives you. It's really tough because philosophy is such a broad term, and what makes it even more interesting is some people didn't like to be called philosophers. There are some thinkers who, if you called them a philosopher, they'd say, I'm not a philosopher. I'm a scientist. I'm an inventor, or what. But again, I think that, again, when I use the term philosophy, I'm talking about taking ideas that have broad application. And I think, why did I start to study it? I think I started to study it, frankly, because of the challenge. I was fascinated by the fact that there were these problems, these metaphysical problems, ethical problems, questions that didn't have an answer. I think, as we talked about, to bring it back to chess for a little bit, with chess, there are solutions, like there are optimized moves now, especially with, kind of AI and machine. Like, there is checkmate, right? But in philosophy, I was dealing with issues that didn't have a final, easy conclusion. There's not necessarily 100% right nor 100% wrong. And I'm actually going to quote one of my philosophers that I used in my book, Friedrich Nietzsche. This is to paraphrase, he basically said, there's no such thing as truth with a capital T when it comes to certain aspects of life. When we're talking about morality, when we're talking about politics, when we're talking about which musical symphony is more beautiful, there's no truth with a capital T. And it's that lowercase t truth where we all kind of have some mix of our own subjective feeling. That is a really, really interesting thing for me because, again, it's not as clean cut as chess, as a lot of other aspects of our life. So I think that's what got me really interested. And I think, frankly, it's something that's familiar with the stock market, because with markets, the rules are not explicit. As somebody who's a lawyer, there are legal rules, which, by the way, also are subject to interpretation. I always recommend staying, way far away from that gray line, right?
Yeah.
Just to be safe. But even so, what is the job of judges? It is to interpret the law, to interpret legislation, to interpret contracts. So, nothing is so cut and dry. I think that philosophy, is all about understanding and approaching that idea. So I think these are some reasons I love philosophy and why I got into it. And yeah, I'm happy to talk more specifics, because I think if we just talk philosophy, it's very easy to get lost in this abstract kind of world where we just speak in generalities. But I think once people start hearing about what do I mean by philosophy, they'll get more interested.
I as I listened to you, you used a couple of words that I think stood out that really economize this well. First, you talked about the idea of an approach. What is my approach? And then the second, you talked a little about different types of interpretations of truth. And I think those two ideas distill it down pretty well. Is I'm going to figure out in the world what seems to be consistent, what seems to be evident, things I can build my house on. Then I'm going to use that into my approach. And the approach might also incorporate, well, what are my own strengths and weaknesses? It seems like I would want to have an approach that plays to my strengths and an approach. So how you approach things, Warren Buffett, and we'll talk about, I'd love you to unpack, because he has a trading philosophy. He has an investing philosophy more than a trading philosophy. But as you look at a guy like Buffett, obviously he's brilliant. He's a genius IQ guy. But the late Munger and Buffett, I think what makes them really stand out is their temperament, and I often think the wisdom. They've always been sages because they're so old. I think they got a lot of years on us, and I'm no spring chicken. But talk a little bit about Warren Buffett and pick apart the things you see of the great thinkers he's followed. Obviously, Benjamin Graham was a big one, but there are others too. Could you pick that apart a little bit?
Yeah, well, it's interesting. I actually start the book with Benjamin Graham, who was actually a very big student of the classics. And there's actually interviews of students of his from Columbia University, from the business school, that attest to the fact that for his investing classes, he would actually start each one by quoting the philosopher Baruch Spinoza, who was actually the first person I talk about. And the way he quoted Spinoza was, he said that when you approach markets, the way to be most successful on Wall Street is to approach it from the perspective of eternity. Sub specie aeternitatis, I believe, is the Latin. And what he's basically saying by that is, he means to take this zoomed out view where you are not caught up in the vicissitudes and the emotions of the market on an everyday basis, and take this zoomed out kind of cerebral approach. And I think that just Graham's starting with that creates the kind of basis that Buffett is building on. I think that Buffett, again, he says so many great quotes to break it down for anybody who's a beginner. But at the end of the day, he says things like, if you're not comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. He has all these different things that kind of push you to view things from this long-term intrinsic value standpoint of what are things in the steady state of eternity, so to say. So I think that Buffett is coming from that lens. I think all of these things are so much easier said than done. I think that for somebody like Buffett, the thing is he practices what he preaches. A lot of people it's very easy to preach being patient and not getting caught up in manias, but it's very hard. It's funny. Some people say Isaac Newton, one of the smartest people, if not the smartest person ever, right? He got caught up in the South Sea bubble, right? So I think temperament is everything. I think that Buffett has done a really good job of being willing to do things that a lot of other people wouldn't be willing to do. One of them is he's held a lot of cash. I mean, he's talked about that. He says, in investing, there's no called strikes, as Buffett says. He says, you get to see as many pitches as you want. You can only strike out swinging, right? But he's really taken that to the extreme in terms of, he waits for his fat pitch to come right to him. Oh my God. And he's willing to hold cash. And when other people would be, people who were investing on behalf of other people would be not willing to do that because they feel like they have to justify their existence. Like, oh, if I'm not making investments, then why do you even need me? But, he's shown patience, and he's shown an approach that I think really fits in with this kind of Spinozistic idea of being from the perspective of eternity, even if he's not directly citing Spinoza. Again, I think it's that sort of zoomed out approach that really, really makes Buffett an incredibly successful investor. Because again, I think, as you said, you can find people with the same sort of intellectual motor, these IQ geniuses that don't have the investment success. And and I think Buffett even talks about this himself. There's horsepower and then there's throughput, right? And I'm so not an expert on cars or engines, but the idea, right, is you could have this powerful engine with all these capabilities, but if they're not finding their way through to that endpoint, if they don't end up making you a better investor, what good was it, right? And again, I give that Isaac Newton kind of example where you have someone who has this incredibly sophisticated mind, but doesn't have the grounding or maybe the market philosophy to succeed. This is not to put down Isaac Newton. He said this himself. He acknowledged it himself. That he could figure out the laws of physics, but he couldn't figure out the laws of markets. So
they are different animals for sure. We're here with Ethan Everett, and we're discussing his book, The Investment Philosophers, Financial Lessons from the Great Thinkers. When we come back, we're going to shift a little bit from talking about approach to applying this into something that Ethan does every day, which is research. He's got some really interesting tools that are going to utilize technology and AI that you can try out for free. So when we come back from the break, we're going to dive into research, and that'll be a great conversation. So we'll see you back in just a moment.
Really, I think anybody can follow Andy's steps to learn this. He made everything so easy. You can actually ask real-time questions with them and get real-time answers. There's so many different trading platforms. They will take the time and be able to show you how to use whichever platform you're on.
I've just really enjoyed how they have taken what could be complex material and really made it simple to understand. Learned how to take some of the complex trading strategies and produce cash flow. They really go beyond just trading stocks. They really make it about lifestyle to make yourself the best person you can be. Everybody that's an expert started out as a novice. You got to start somewhere.
Welcome back to the Cash Flow Academy podcast. Again, my name's Andy Tanner, and this is where we make investing fun, simple, and real. We're here with Ethan Everett. His book is The Investment Philosophers, Financial Lessons from Great Thinkers. We were speaking about Warren Buffett before the break, and it is interesting to see his, he hoards cash, and you talked about he waits for the fat pitch. Isn't it interesting? He also you employed the term vicissitudes of the market, and that he actually, I wouldn't say he depends on it, but it's no small part of what he does. The idea that people are greedy and and then you become fearful. But when they're fearful, you really become greedy. And crashes for him are what he waits for. It's what he lives for. Certainly he's brilliant in fundamental analysis. He's a value investor. He understands financial statements. He understands a moat, which is really a great risk management tool, really. And so be that as it may, he may see something and says, I really like this. But there's also an element, if you look at some of the best trades he's made, is where he's waited for a lot of the banks he's bought. He waits until that rainy day. He waits until people are just suffering trying to get rid of their stuff, and he buys them on the cheap. So that ability to have a philosophy like that has been a big deal.
It's interesting with Buffett because, and this has not been the case for his entire investment career, but when you look at the later decades of it, so once he becomes the Oracle of Omaha, so to say, like let's say post 2000, when he really becomes like a true, not that he wasn't this idolized investor before that, but let's say when he really comes into kind of like the common parlance, the pop culture of investing, he not only is this great investor, but he even also gets to see pitches that other people might not get to see. Yeah. And what I mean by that, and that does not explain his investment success leading up to that, but I do want to give the example of, for instance, Goldman, this is in 2008, in order to show the market that they were stable, they wanted to get Buffett as an investor, to basically get Buffett's seal of approval that they were going to be okay. And they effectively gave him this sweetheart deal on these preferred shares. I mean, it was almost like a no-brainer. And the truth is, they would never have given that to anyone else. They were getting something from Buffett by him basically effectively being a stamp of approval. I think that's always interesting because, again, somebody's reputation for something can then go on to actually affect what they end up doing. Again, that's not the majority of what Buffett does, but I will say that now it's almost like a badge of honor to have Buffett as an investor.
Oh yeah, for sure. People get excited about that. However, I think it's important for people to get this, is there is a fine line between having a sound philosophy and being a dogmatist. Because you can be trapped by dogma. And if you just begin to believe in things stubbornly, a great example of Buffett not being dogmatic was when Munger came into his life. Buffett's philosophy changed entirely. Buffett used to look at companies that were suffering. He used to look at companies that were dying. And he says, you know what, if we buy this on the cheap now, it might have one more little pop. It'll pop, and then we'll get that last smoke of the cigarette, of the cigar butt. This cigar's got one more puff in it. We'll try to get that last puff, and then we'll be done. And Munger came to him and said, this is fine, but you're never going to get massive unless you really invest in companies. It's better to get a great company at a fair price than a fair company at a great price. And all those quote cliches, but it is.
It's a great point. How adaptive. He was.
Yeah, you don't want to be dogmatic. Steve Jobs said, "Don't be trapped by dogma." Let's move a little bit here, though. About I've got so many notes here that we're not going to be able to get to, but let's talk a little bit about the idea of the philosophy of research. Possibly, I believe in my philosophy is there's 4 pillars of investing, and the most important pillar is risk management. The ability to understand risk, and probably among you can look at position sizing, and you can look at your ability to use hedges and understand how the options market can help you, and all those things. But I'll tell you, if you really want to have a solid company that's going to be around a long time and take that big view, there's this idea of a moat, and that's a great risk management tool. We all know what a moat is to defend a castle. It's a defensive move. That you have the big hedge, you have the hawthorn bush where you hedge, and then you have the moat, and you want to protect that castle. But a lot of people don't realize what that looks like in the investment world. What does a moat look like? What can we identify? And that's where research and what you do every single day is so important to know how solid against competition and against problems, it's staying power. So talk a little bit about this, and then you have some tools for our listeners as well. You've got a new tool that really takes, AI is going to, what AI has done so far is it's really accelerated mundane intellectual labor. Building spreadsheets and gathering data and organizing data and interpreting data. AI is really great for mundane intellectual tasks. And when you're looking at research, I look at how the old guys used to do it. They'd open up a book this thick and start reading financial reports. And we just have so much greater access digitally with information being digitized. We could do, I can't remember, it was SEC Chairman Arthur Levitt, I believe, who said, we should be the most informed generation of investors in the history of the markets. The ease of today's technology is not an excuse to do less, but an opportunity and a mandate to do more, be more as individuals and also, collectively. So talk a little bit about your philosophy on investment research.
Yeah, so it's something that I pay attention to all day long, this looking for moats. And as you said, moats can come from many different places, whether it be network effects, whether it can be cost advantages, whether it can be having a strong brand. These are all things that are really important. I think that the first place people look for moats is in the numbers, right? Something has they have really high profit margins, they have a really high return on invested capital. I think markets have gotten to the point where oftentimes those sorts of moats are well documented or appreciated by the market and generally get bid up in terms of the price people are willing to pay for them. The thing that I, kind of that golden ring, the holy grail that I look for on a daily basis are these moats that either don't exist yet but are about to come sometime around the corner, or moats that aren't showing up in the numbers for some reason right now because of some one-off or discrepancy or some idiosyncrasy of accounting that it's not showing. Because at the end of the day, you want to get it at that fair price, right? So, because again, listen, you could go around paying incredibly high earnings multiples for incredible businesses, and not that that's necessarily going to be a bad way to invest. But again, as you talked about with like a Buffett, you want to find ones where the market has not fully priced in what you think the business reality is. So on a daily basis, I'm looking for these things. And I think that from a philosophy standpoint, the difficulty is not only am I skeptical about the market, but I'm skeptical about myself. And for me, I'm constantly kind of having this mental dialogue of, okay, if you see this and you think the market's missing it, who are you? Why are you so smart to see this? What is it? Because at the end of the day, right? Markets are not. I'm a big believer. Markets are not always efficient, and I mean that's the starting point of a lot of investing.
They're absolutely not.
For anybody who says that markets are never efficient or never get it right, I think that's also totally wrong. I think that there's a balance where very often markets do get it right. You got to pick your battle. It's like with Buffett, you got to pick your battles as to when you're saying, not only is the market wrong, I'm right, and the market is eventually going to realize that I'm right. Now, the market realizing that you're right could be in many ways. Like it could be through, listen, you might get paid enough dividends that, the market never has to realize that you were right in terms of the price of the security. But again, at some point, there has to be some reckoning. I can't tell you how many times there are these investments that are great in theory that never have a catalyst. There's never any, kind of something like, again, I'll give you an example. The Madison Square Garden sports, again, controlled by James Dolan. I'm a big Knicks fan, right? I don't think anybody would argue that the stock on a theoretical basis isn't undervalued. I mean, the Celtics, I forget, the Celtics sold, I forget if it was around $7-8 billion. And you get like the Knicks and the Rangers I haven't looked at the market cap recently, for 5 point something billion. It's so undervalued. But the problem is, James Dolan has said he doesn't plan on selling anytime soon, right? So the problem is you're not getting any dividends. You're not getting anything to own Madison Square Garden sports stock. So again, the question becomes, okay, is there that moat? Am I seeing something that other people aren't seeing? But then also, from a pragmatic standpoint, is there that catalyst? And I don't mean, when I say catalyst, I don't mean to say that people shouldn't, people should be hyper-focused on, 6 months to a year. But if something doesn't have a catalyst within 5 to 10 years, at the end of the day, you're risking the opportunity cost of cash.
I think you can learn a lot about the moat, and not just to dwell on Buffett at length, but he is the best. So I guess that's not too bad of a model to dwell on. I think one of the greatest examples of a moat, and you mentioned you love to play chess. I'm not the best chess player in the world, but I do enjoy to play, and it's fun when you're playing chess where you're creating an environment where you get the upper hand, where you're forcing a person into tough decisions, and you're actually forcing his or her move. For example, they say, okay, if I move here, I expose this. Mm-hmm. If I move here, I'm taking this. And if I move here, I'm going to lose this. And they're starting to choose between the lesser two evils. They start to play defensively rather than offensively because they have to. They have to defend. They have to run, basically, or block, basically. And it's a great offense-defense game where you place a person on defense. And I think that's a lot of how Buffett invests. Like when you look at when he bought Burlington Northern Santa Fe, and he's looking at that company, and the nice thing about that's a great example of a moat, because think about this. Right now, if you wanted to build a railroad that large, it's $500 billion. It's $500 billion. And nobody's going to wake up in the morning and say, let's raise $500 billion and go compete with Burlington Northern Santa Fe. Let's go. It would take eons. Not eons, but it would take. There'd be no return on investment for ages, and people just don't have that longevity of thinking. They're not going to say, let's build a railroad, because they want a return on investment faster than that. Building a railroad is not like building another. It's not like the Wynn brothers going to say, hey, let's go build another hotel. I mean, it's far too great. And so Buffett basically gets to say, if you want to eat and you want to ship some grain, you got to write me a check. And if you want to have some lumber, or you want to build a hotel and you want some steel, you got to write me a check. In other words, I'm so important now, I've inserted myself in the economy to such a degree that you have to use me. You have to write me a check. 40% of the nation's freight is by rail, and I now have the biggest railroad. What are you going to do? You got to write me a check. And I think that type of stuff is fantastic, because it's not a new microchip. AI will do nothing but make his scheduling and logistics better. He didn't have to find some new thing, some new mousetrap. He just simply saw, man, these guys are in a bigger position of power maybe than the market thinks they are. This is a bargain, and no one knows it. They don't see it. Stuff like that.
It's fascinating to look at the other side of the coin for those companies where if you kind of take a time machine back, and hindsight's 2020, not knowing the future, what were companies that people would have said had some giant moat that they probably couldn't imagine being disintermediated? And, I'm not old enough for this, but, people in my parents' generation talk about how the Sears catalog next to the Bible was the most important book in the house. And I mean, Sears did, upon my research, it's mind-blowing how much stuff Sears did. Sears sold manufactured homes.
They were the Amazon of the past.
everything. They had so, if I'm correct, they've had all these things that they spun up that you wouldn't even know were parts of Sears. I believe it's Allstate that was part of Sears at one point. They had insurance operations. They had it was this empire, the way that Amazon has its hands in everything, Whole Foods, you name it, Amazon's got its hands in it. It's just it's easy for us to look back now and say, oh, well, that was, BlackBerry or Sears or these companies were it was, you could see that coming. But the truth is, people really didn't see it coming. So I think it really pushes you to kind of think, like, what would have to happen for Burlington to be pushed out? Something, what, do we have to create, teleportation or something? Right? But it is always interesting to push yourself on those questions, because there's a lot of things right now where we talked about with AI, where AI is going to fundamentally change a business. And, it might have been said jokingly 30 years from now, oh, we have this great business, but it would take a super cute computer AI to take away our competitive advantage. And it's like, Here we are 20 years later, and we're actually coming across that. I'll give you one other, I love this example. So the Wright brothers, I believe it was when they first took flight around, it was early 1900s, I think around 1904. But anyway, but I know that this was like a couple of months before the Wright brothers first were able to, hold their first successful experiment publicly. There was I believe it was a New York Times writer who said, what are these crackpots doing? People have tried to figure out how to fly for the entire history of humanity. This is a waste of time. We just need to accept that this is the way things are. This is all folly and it's stupid effort for them to be doing this. And then a couple months later, they do it. He said literally that, like, this isn't going to happen if it does happen for 1,000,000 years or whatever. And it just, I love hearing those stories, because we're not always so good at estimating the amount of time it takes for something to happen. And that happens on both ends of the equation, right? Sometimes it happens much faster than we expect, sometimes much less faster than we expect. I mean, I remember when I was in college, I thought by 2020, all cars, everything would be self-driving almost entirely. And listen, it hasn't happened that way. There's a lot of self-driving technology, but for all these different reasons, bureaucracy or laws or technological failings, that hasn't happened. I think that one thing, and this is something that philosophy gives us, is this kind of not just skepticism of the markets and what other people do externally, but this skepticism of ourselves, to push ourselves, because it's so easy to say, oh, well, I see that. Well, this would have been it. I could have easily made this investment. I would have made all this money. It's like, whoa. Again, pushing for hindsight is 2020 there was, Kierkegaard, who I don't say this in the book. He's one of the philosophers, though, that I do talk about. He said, life can only be understood backward, but it must be lived forward, right? Which is basically 200 years ago, someone saying hindsight is 2020, but it was before anyone said hindsight's 2020.
We didn't know what 2020 was.
Yeah, right.
Then.
Yeah, right. It's actually funny too. I love this metaphor of vision, and it's funny. This philosopher I talked about with regards to who Ben Graham would bring up, this is Spinoza. He was actually a lens grinder. That was how he made his living, by grinding lenses for microscopes and glasses. And I love this idea of, kind of, we talked about this earlier. What is philosophy? It's this lens that enables you to go out into the world and do certain things, right? It's this kind of base lens through which you see the world. I think that's very interesting. I think it's important that we think about that. And yeah, I think, as we've said, Buffett has one of the best ones ever. The moat paradigm is fantastic. But, I'm sure that even he, is constantly trying to improve his lenses, so to say. You know, maybe
Always.
he's trying to make bifocals out of the glasses.
Always.
Shout out
Always.
to Benjamin Franklin, who I know was Charlie Munger's biggest idol and one of his biggest idols in terms
For
of intellectual people. But I should say, I don't think Franklin would like to be called an intellectual. I think he'd like to be called a pragmatist, right?
Yeah.
As a doer.
Certainly an innovator, for sure.
Yeah.
Certainly
and
an
he didn't
innovator.
have hardly a day of school either. So
I think he was brilliant. I love Franklin. You can go to LinkedIn and you can find Ethan Everett, and you can also get information on the AI tools that he's developed, and he's going to make those available for free in terms of research. This is important. You know, AI is going to change things in the next 12 to 24 months. We're about 3 years away from general AI, and about 6 years. The San Francisco consensus is that we're about 6 years from super general or artificial general intelligence, super intelligence. And it's really important to do research right now and own things. That's my philosophy, speaking of philosophy, is ownership is better than labor. And as labor becomes more productive with AI, and actually we'll have more people doing we'll have less people doing more things. The creators of AI have speculated on whether this will be creative destruction and create more jobs, or whether it will be, I'm in this camp, it's so different that it'll be what we call comparative advantage. So right now, one of the important things to learn how to do research is to buy things. That's the one thing, you know, ChatGPT, you know, maybe I'm chatting with it and it says, hey, Andy, would you be willing to sell me your Apple shares? I'd say no. None of my shares are for sale. If you see the amount of buybacks that are happening right now, there's no better endorsement for a company's belief in their own. You know, if you have $50 billion like Salesforce does, and they say, well, we could buy a company, we can invest, we can do R&D, or we could just own more of our stuff. I think the best deployment of that capital. Employment of a human being versus deployment of a technology now is a really interesting question, because we have enough sight and perception with AI. You know, Amazon can recognize all of its products with its robots. We have manipulation where we can roof a house without a human being now. We can put up drywall robotically now. So now we have this comparative advantage where an entrepreneur says, order taker a kiosk, you know, which is better. And it's really just expense. That's it. Is it, you know, I got a 401k here, I got sick leave here. Well, this might break down and need repair, but this will work. You know, this will work a 12-hour shift, where this one will work an 8-hour shift. And so that comparative advantage, really important for everyone to learn to do what Ethan does every day, which is research, because the reason we do research is so we can buy stuff. Yep. And I'm very, very, very much about ownership. I will probably never sell another share of stock the rest of my life. The float will shrink. The amount of shares that will become restricted. I mean, think about Salesforce. They're going to buy back $50 billion. That's about 25% of the float they're going to buy back. And the institutions own 80% of stocks because they've been siphoning fees from 401ks to buy their own stuff. The scarcity of shares over the next 10 years, it'll be much like a hyperinflation, I think, where people will realize, wait a minute, I got to compete. Like all mundane intellectual labor now can be done by AI. I either got to innovate, or I got to get another job, or I got to figure something out, or I could just own stuff. So learning how to do investment research, having a philosophy right now that will accommodate the future, do two things. Go to LinkedIn and find Ethan and ask him for a free shot at using some of his tools. And then go to Amazon and pick up the Investment Philosophers, Financial Lessons from Great Thinkers. If someone's on the fence and they haven't invested and they're newbie, they're brand new and they're considering getting into the investment game and they're listening to you, trying to find some confidence. One of the notes we didn't get a touch on that might be really good, they might have some anxiety. about the risk involved. I think it's a bigger risk not to invest myself. I think having a mediocre company is better than having money in the bank right now.
Yeah. Buffett wrote a great article about that like 50 years ago about how the real risk is keeping your money in cash and having inflation eat away at it slowly.
Yeah, the only reason he has cash is so he can pick a spot. That cash is on his cash is in the on deck circle. That's a great way to say it.
Exactly.
All of his cash is sitting in the on deck circle, and he's just waiting for that at bat where he's gonna deploy all of it. He's gonna swing for the fence. So tell people, speaking of philosophy, if someone's on the fence thinking about, gosh, I really learn investing at this time. I'm busy. I got other things in my life. Do I really want to take on this learning? What would you say to them educationally? Why is it worth reading this book?
I think that this book is written in a way that anybody can approach it. I really tried very hard to do that. I think that for somebody who's really interested in kind of embedding meaning into their investing, that's I think where my book really fills a gap. It's not just about like being able to see things in a way that other people don't, but I think that when you're investing has meaning to it, you're more interested in it. It's easier to do the things that you need to do in order to be successful. Something like the way, now you have to be careful, right? Buffett, as Buffett says, to bring up Buffett again, you might have feelings towards a stock. The stock gives you the ultimate cold shoulder, right? It doesn't even know you own it. The stock could care less, right? But what I mean by embedding meaning is, I think that, investing is almost a creative expression of ourselves. And I don't mean to sound like, sappy here or overly, sentimental, but I think that I do feel that way, right? And I always felt like when, chess to me and the way I played was kind of like an expression of my personality. I feel like investing is like that too. And I feel like when you make all of these connections with these interesting philosophers, you're making your own investing more interesting. Not only are you making it more successful, which is obviously a huge part, but also, and I have an entire chapter on this, about the importance of doing something meaningful. There are so many people, the people that are on Wall Street that their only goal is dollars and cents with zero meaning attached to it. I don't think that's that fulfilling of a life. So I am somebody who recommends, no matter what level of investing you're doing, make it meaningful as opposed to just kind of going through the motions. I think that's kind of something that we've been told is the right thing, kind of to remove any sort of emotions from our investing. But I think that's excessive. I think we want to stop emotions from making us make illogical, bad decisions. But at the same time, I don't think that investing should become this kind of monolith, feelingless, meaningless sort of thing that just becomes a part of the daily motions. I think hopefully my book will make you think about investing in ways that you didn't necessarily think about before. So, and if one of the thinkers doesn't click with you, there's 12 other ones.
There's 12 others.
For me, and I've had people they're all across the board. One of the thinkers I use is Bruce Lee. And he was a philosophy student. He actually taught philosophy as well, but obviously first and foremost was martial artist and Hollywood movie star. But his sort of thing, where does he come into all this? Bruce Lee believed that you should have the style of no styles. He said you should have the style that works. You shouldn't just have a strategy or a philosophy going into a fight that you're just going to stick to no matter what. You need to respond in real time to the opponent's moves, similar to how we have to respond in real time to the movements of the market. Someone who just goes in, as you kind of alluded to, and just has this dogmatic philosophy and that's it. Like imagine, going into a fight and your strategies always move forward, but they duck out of the way and then they kick you in the head. Okay, clearly you have to do something else. It's funny because in markets, sometimes people don't do that. But again, just like right now, I just started talking about mixed martial arts, and all of us, and we're still talking about philosophy and investing.
Sure.
Again, I think that for people that that want to get involved in investing and want to make it interesting, in addition to being profitable, I think this is a book for you.
Fantastic stuff. It's going to be a great read. Ethan, please hang out for just a bit after I close the show so I can properly thank you. You've been watching and listening to the Cashflow Academy podcast. Make sure you hit your like and subscribe, share it with a friend, notification bell. Don't forget to drop by cashflowbonus.com for your free stuff. We always have free stuff. And then check out Ethan on LinkedIn, learn about his AI, and pick up the Investment Philosophers financial lessons from great thinkers. Hope you enjoyed our program. We'll see you next time.